welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's 12th of June 2023 and here are the top stories for the day. How can Byju's get out of its debt crisis? How will Apple Vision Pro change the user experience? How to identify potential winners in the stock market? What is seller's inflation? Byju's, India's most valued startup, is in the news yet again. It has defaulted on payment of $40 million to lenders in the US and is reportedly affecting another round of layoffs. US-based asset manager BlackRock too has slashed its valuation by 62%. Things clearly are not looking good. But is there a way out of this debt crisis for Byju's? To find out, Bhaswar Kumar speaks to experts and delves into the details.
The long-drawn disagreement between Byju's and its lenders has intensified. The Indian edtech major has sued American investment management firm Redwood and related entities in the New York Supreme Court for accelerating the repayment of a $1.2 billion term loan B or TLB. The Bengaluru headquartered company also missed its quarterly interest payment of $40 million for the TLB. Through its suit, Byju's is seeking to disqualify its lender Redwood. Byju's alleges that Redwood has resorted to predatory tactics and that it has acquired a sizable stake in term loan B with the intent of making windfall gains. In its New York lawsuit, Byju's has argued that it isn't in violation of its US debt contract. While the agent for the lenders has declared a default and demanded immediate repayment of the loan, Byju's has asked the court to dismiss the default. According to Byju's, its current debt crisis has been caused by aggressive distressed debt investors who shouldn't have been able to buy the loan. According to Bloomberg, the lawsuit claims that the debt contract prohibits lenders from selling their stakes to any entity on a list of disqualified lenders or investors who specialize in distressed debt. For their part, the lenders have said that Byju's lawsuit is meritless and designed to dodge obligations. There's another lawsuit underway, which Byju's is fighting in a Delaware court against lenders who have proposed to take over Byju's Alpha, a US entity of the edtech firm, by putting their representative in charge after an alleged default earlier in 2023. According to Byju's, the lenders in March had accelerated the repayment of the term loan B or TLB, citing certain alleged non-monetary and technical defaults. For its part, Byju's maintains that it has not defaulted on any repayment of the TLB. Citing the legal proceedings in Delaware and New York, Byju's has said that it has elected not to make any further payment to TLB lenders, including any interest, until the dispute is settled in court. Byju's has added that it remains open to discussions with the TLB lenders. Byju's arranged a $1.2 billion term loan in November 2021 to finance global acquisitions. Now, it has gone to court after several weeks of negotiations with the lenders in a bid to finalize new terms for the disputed loan agreement. According to a financial daily, the delay by Byju's in filing the audited financials for FY21 and FY22 led to the new agreement and terms for the TLB. The company is yet to file its audited FY22 results. While we have to wait and watch how the lawsuits conclude, how can Byju's for its part weather the latest storm?
Till about recently, it did not even have a proper full-time CFO. So to that extent, that indicates to you how Byju's has not paid attention to business fundamentals in its growth journey. And it is now only feeling the stress or the pinch of all these. And I think the corrective action for Byju's is to hunker down, not chase valuations. Many public market investors like BlackRock, etc., have valued or written down Byju's valuations. So Byju's may have to raise new funds at much lower valuations just to ensure that it survives. Obviously, it has got to cut costs, cut some businesses aggressively, and work towards a path to profitability. It also has to put in place fundamentals of business, adhere to some basic value systems, which seems to have been missing all these days.
Byju's most urgent requirement on the financial side is to get profitable. FY21, it ended with a loss of over 4,500 crores. And it's seen that the revenue increase is also not as robust as it was earlier. So how to increase efficiency and achieve cost optimization are the key areas that the company is working upon. Because valuations ultimately demand profitability.
it does appear that Byju is taking some measures aimed at cutting costs. Having already laid off about 1,000 employees in 2023, the startup is expected to lay off more employees. The crisis also comes at an inconvenient time for Byju. The Enforcement Directorate had recently conducted searches at several premises linked to the startup as part of a probe into alleged violation of foreign exchange rules. On a separate note, Byju filed its 2020-21 results in September 2022 after a nearly 18-month delay and posted losses of 4,588 crore rupees, 19 times more than in the preceding year. Concerns have also been raised that many crises faced by Byju could also have an impact on the larger Indian startup ecosystem. Regarding such apprehensions, what does the expert Business Standard spoke to have to say?
Overall, VC funding and equity dilution for raising funds has hit a roadblock post the setbacks faced by many in the venture capital business, and it is no more that easy. So raising funds on lofty valuations is no more easy as it used to be few quarters back. Lenders have also doubled down on more financial parameters before making fresh investments, and it appears that the checks and balances are here to stay and that they won't go away in the near future.
While the court cases play out overseas, for its part, Byju must focus on cutting costs, raising funds, even at valuations lower than it may like, and putting in place governance structures. A concerted effort across all these fronts could give India's most valued startup a longer lease of life as it tries to overcome multiple crises, including the latest term loan challenge.
She'll soon be quoted on the front page. Business Standard.
On the other hand, Byju has introduced generative AI in its learning modules to provide students with personalized learning experiences. Worldwide, companies are increasingly taking the help of technology to enhance services. Tech giant Apple too has taken another technological leap with its augmented reality headset called Apple Vision Pro. This device seems to have taken the tech world by storm. So how will this most anticipated headset change the user experience? Ayush Mishra and Tariq Ahmed do the reality check.
Apple unveiled its Vision Pro headset on June 5th, and it will hit the US market by early 2024. Priced at $3,499 it will be the company's first major new product in almost a decade. So what is so special about it? Well, you will have to wear it to find out. Most of those who did during the Worldwide Developers Conference are yet to get over from its spell. It transports you into a different world. Imagine you are able to open up virtual screens in thin air. Here you can interact with your physical surroundings and function in both at the same time. Users can scroll through or select an option by flicking or tapping together their fingers. This headset has a host of sensors to track eye movements, hand gestures, and voice commands, which are the primary ways to control it. With this new technology, Apple introduces a new dimension of computing to the world. Tim Cook describes it as the first Apple product that you look through rather than at. While virtual reality is a fully immersive experience where you are cut off from the surroundings, augmented reality gives an overlay of digital elements over the real world. It's a see-through. In mixed reality, on the other hand, the device adjusts to the changes in the surrounding. Apple's Vision Pro is introducing spatial computing. It means the user will be interacting with screens which are floating in the air. To make that possible, Apple has come up with new operating software called Vision OS, which enables the three-dimensional interface to make the digital content look and feel as it is present in the user's physical world. The two ultra-high-resolution displays with 23 million pixels allow the user to expand the screen size to even 100 feet wide. The spatial audio system in Apple Vision Pro is very advanced to give the sense that the sounds are coming from the surroundings of the user. This makes this device well suited for gaming and watching movies. The Magic Keyboard and Magic Trackpad, along with the spatial FaceTime, makes the Vision Pro device a perfect device for work. The Vision can open multiple tabs, move it, drag it, minimize it, or magnify it with natural and intuitive movements. While using FaceTime, users can magnify the tiles to life size and position people in the 3D space. With the spatial audio system, the sounds will come exactly from where the user has positioned them. Also, a user wearing the Vision Pro headset during FaceTime is reflected as a persona. The persona is the digital representation of the user made using the advanced machine learning technology of Apple. Currently, the Vision Pro can run unplugged for 2 hours. The device has a weight of around 454 grams and an external battery needs to be attached to operate it. Apple Vision Pro will be an impetus for the AR and VR products in general, as they are going to create content specific to the new technology. Meta's virtual and mixed reality headset Quest and HTC's VR headset Vive have been struggling because of low adoption rates. Mark Zuckerberg said that his vision is different from Apple's, and Meta is trying to create a metaverse or a 3D immersive internet.
6 to 9 months that they are taking is to allow developers to create applications and therefore also eventually content specific to this world, which is what they've partnered with Disney also for, to create content. And Apple also has the power to induce Hollywood studios to create content, especially for entertainment for this world, which Quest and Meta and other HTC, etc., did not have the power to do. They did not have the power to make Hollywood studios create content specific to their devices, which is one major key difference between their not being able to take off and Apple hopefully having the potential of taking off, besides the fact that it is just a vastly superior device.
Visual Pro will be getting takers from healthcare and entertainment industry.
There are a few hospitals we know in India where they actually do the training for the new recruits or the interns or the residents, and they discuss the surgical cases on Microsoft HoloLens. So it will remain that possibly with Apple entering this space, even at a higher price point, this might take some takers in the higher end entertainment.
Experts think that the possibility of spatial computing are profound.
Currently, it is a mixed reality device. Eventually, it will have to become augmented reality and much lighter. It's still relatively bulky. We do not know the exact weight, but it's probably closer to 500 grams, which still is very heavy to wear. And so once it becomes lighter, its battery gets integrated into the actual headset, and it doesn't have to be tethered to an external battery pack. And once all of those things happen and computation keeps increasing, as happens with technology over time, it definitely has the potential not only to replace smartphones, but also personal computers, television sets. All of those devices will get integrated within this one technology. It will become the most important personal computing device ever.
Without any doubt, the Apple Vision Pro headset is leading the way in spatial computing. Once the device-specific content and application is ready and it has evolved to be lighter and less expensive, Apple Vision Pro has the potential to replace PCs and smartphones to become the most important device of the near future.
Looks like Apple has put in a lot of thought into making the new headset. Even people with prescription glasses can use it, as Apple has partnered with German opticals manufacturer Zeiss to create magnetic lenses that connect to the inside of the headset. Moving on, India's stock market recently reclaimed its position as the world's 5th largest market. Over the years, equity trading has seen many changes. One man who saw all these changes is Kishan R. Choksi, the chairperson, founder of KR Choksi Shares and Securities. In our next segment, Business Standard's Puneet Wadhwa talks to Kishan Bhai, as he is fondly called, to understand what has been his investing mantra over the years.
Hello, welcome to the show. I'm Puneet Wadhwa, and today we have with us Mr. Kishan R. Choksi, founder chairman, KR Choksi Shares and Securities with us. Hello, Mr. Choksi, and welcome to the show. How have the investing habits changed over the last few decades, especially since when you started investing?
The things have changed a lot. Companies have become more efficient.
because of the technology. And now the people, those who are promoters, they are looking to market cap rather than taking out money from the company.
What about the investors? A lot of investors are now here to make a quick buck, as opposed to earlier times when value-based investing ruled.
I think if one has to make money in the stock market, one should have patience and identify the stock and keep it at least minimum for 1 year.
And then how does one identify winners? What has been your strategy?
My strategy is the industry first, then identify the company out of the industry, buy it and keep it for at least for minimum for 1 year. And till the company is doing well, we will hold the shares.
A lot of experts do give buy recommendations, but at times it's difficult to ascertain when to actually sell a stock. How does one go about doing that?
When you purchase a company, you have continuously follow it. Well, every 3 months the results are coming. So you can see the company is progressing as per your expectation. Until the growth plans are there in the company, one should hold.
Are there any metrics that you used to follow and still follow?
I think the management is very important in a very company, because if you see that if the management is good, then the capability of the management is also very important. Then he can take advantage of the good situation.
So what's keeping you busy these days? What are you buying and selling?
It all depends upon the industry, particular industry. If the industry is doing well, then I try to identify stock and purchase myself also and ask the investors to buy them. Today automobile industry is doing very well. So automobile ancillary companies will do well. So one has to identify the stock and recommend and purchase.
In terms of market size, where do you see the markets in the next 3, 5, 10 years?
Today the government is very much active. They are taking stock of the companies because there is a large investment in the public sector, and previously nobody was taking stock of the public sector company working. So that is one part of it. And secondly, with the Modi coming in, I think there are a lot of changes have happened in the economy, and that's why I think so far as he is in the power, our economy will grow.
Any reforms, capital market related reforms that you'd like to see?
Reforms means the promoters are to become more open, and they should see that the investors understand the industry and the working of the company.
So what's your key message to the investors who started dabbling in shares now?
No, I have observed that the people who are doing trading, they don't make money. Those who are investing, they will make money. One has to identify a good industry, good company, and good promoter. If all are good, then it is possible to make money over a period of time. Faster is not possible. Working of the company also takes time. So if in 1 year, there are 3 interviews of a company. So every quarter you can observe the working of the company and see that the company is going according to your observation and your understanding.
Thank you for your time, Mr. Choksi. We hope to see you soon.
He's making plans for an early retirement. Business Standard.
In the first half of 2020, stock market plummeted across the globe due to the onset of pandemic. The virus also disrupted supply chain, pushing prices of essential commodities. That bad phase is behind us, but prices haven't come down. Economist Isabel called it seller's inflation. Raghav Agarwal has more on it.
Speaking at an event earlier this week, Christine Lagarde, President of the European Central Bank, said that in 2022 and 2023, certain sectors had taken advantage of a mismatch between supply, pushed down by bottlenecks, and demand, enhanced by recovery. This prompted the companies in these sectors to raise the prices of their services. However, Lagarde added that some of these companies had increased prices more than the required extent due to the cost push. In economics, this type of price rise is called seller's inflation or seller-induced inflation. During periods of distress in the global economy, businesses are usually subjected to a lower supply of raw materials, among other factors, which reduces their margins and ultimately profits. To tackle this, these companies increase the prices of their products, leading to higher inflation in the economy. This inflation, induced by price hikes by the sellers, is called seller's inflation. In recent times, this was widely seen in sectors like FMCG and automobile during and after the COVID-19 pandemic and later the war in Ukraine. The supply-side constraints in raw materials and semiconductors pushed companies to increase the prices of various products ranging from biscuits to cars. However, this is not the only reason an economy might witness seller's inflation. Several times when a company enjoys a monopoly or considerable influence, it may use the power to push prices upwards. In many other cases, some big companies in a sector form a cartel and artificially increase the prices of their products. An example of this is OPEC deciding to cut oil production, thereby reducing supply in the market and thus increasing prices. In a research paper released earlier this year, Isabella Weber and Ivan Vazna, both faculty at the University of Massachusetts, said that firms only raise prices when they are confident that their market shares will not be harmed. Moreover, in these cases, the prices do not decrease as quickly as they rise. In the research paper, the scholars said that reducing prices is a means of last resort for these companies. If the demand falls due to sellers' inflation, these firms respond with increased advertisement and product innovation, not price cuts. In March this year, a former Deputy Governor of the Reserve Bank of India, Viral Acharya, said that the top 5 private firms in India charge higher prices from their customers as compared to their customers. According to Acharya, this is due to a sharp rise in industrial concentration and is pushing up core inflation in the country. Acharya also suggested that the 5 conglomerates should be dismantled to keep inflation under control. In her address, Lagarde said that the competition authorities should look into the inflation-inducing behavior of these companies and scrutinize the legitimacy of these practices.
The nation's trusted bank, SBI, the banker to every Indian.
While referring to sellers' inflation, economist and New York Times columnist Paul Krugman said, and I quote, "I'm not a free market zealot, but this is truly stupid," unquote. That's all for today. For more news, views and analysis, please log on to business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.